This video chart presentation at AMR Corp. AMR trades on the New York Stock Exchange on the ticker AMR. Now, with what's been going on with the markets, obviously many stocks have just been diving off over the last couple weeks, and a lot of them put together a pretty nice recovery yesterday with the Dow picking up as many points as it did. So there's a lot of charts out there that are very similar to AMR. I thought I'd take a quick look at one and discuss what to possibly look for. Nice candle pattern through here. This would be considered a morning doji pattern. It's a 3-candle pattern with a down day, another gap down day, then a gap up into a strong up day. You look for confirmation on it. It's a relatively reliable reversal pattern, but you definitely look for confirmation on it, which will mean another up day again today. You want to see volume stay strong on this up day. Now, it doesn't mean this stock's going to reverse course and go up forever, but what it will mean is typically some more up days will follow. Then you look for a retrace and you look for a higher low to be made. That's the classic kind of use of the morning doji pattern, or any reversal pattern for that matter. Now you can see you got a strong downtrend in the MACD. All you really look for on that is for it to be broken. Now when I look for long-term reversals, I'll look for that to be broken, start to trend towards zero, then the retrace will happen, and I'll look for a higher low to get made in the MACD. Even if the price per share breaks through that bottom support and makes a new lower low, I'll pay attention to that MACD, and I want to see it trending back towards zero and start to make higher lows. That's a classic case of positive divergence, and many times that tells you the bottom's in and it's going to continue a strong uptrend. Very similar with the pincher. It's a classic PPO ADX pinch, not super deep. PPO is only down around -10, but the same mentality. Even if this stock goes up a little bit and then drops back down, I'll look for this PPO to start trending back towards zero. And when a second sort of pinch will set up, it won't be as deep because the PPO will be trending back towards zero next time it makes a low. And the ADX will actually be coming down more, but it'll rotate and start coming back up, and it won't make a higher high. You can look back at the Dow Jones back in 2008, 2009. It did it when it finally made its bottom. Many stocks do it. It's a pretty reliable reversal pattern. It's something that I look for all the time in charts. Now, you're not going to get much anywhere else through here, I wouldn't believe. MFI's down low, a lot of selling pressure, accumulation distribution down low. Shaky money flow is trying to make a little bit of a higher low, even in through here. That's not a bad sign to see the CMF start trending back towards zero. Similarly, CCI trying to move its way up a little bit. Full Stoat is buried in oversold territory still. Followers of our charts know that we talk about how long the Full Stoat can trend in oversold territory. It doesn't mean a whole lot that it's in oversold. Trix, of course, it's lagging. It's just burying itself right now. RSI's made a strong move yesterday with the buying pressure. You see it's closed up 14%. Did make a little bit of a higher low. Real purpose of this chart is to look at the 3-candle pattern and to look at the very early makings of a possible bottom. I've pretty much described what I look for already in this. Of course, I look for a bottom support at 328 to hold. I think it's going to meet some resistance. A little bit there at $4, but certainly picking up around $4.25. Middle Bollinger Band, this 20-day moving average, is right there. It's the first moving average of any real substance. Parabolic SAR is up in that area. I would suspect resistance to start to pick up there at 425 and probably run right up there to 440. I'd look for that to be a tough spot. Of course, closing at 381, that's still a pretty nice move, about 10% or more to go up there, depending on which area you're looking at. Beyond that, just for the sake of doing it, resistance will get real heavy again, up around $5.50. I'm certainly not looking for anything like that here in the near term. Just identifying a long-term resistance level. Not a lot of support in sight because of the big fall. Look for 328. And to be honest, I'm not even sure if this is going to put together a true recovery. But it's a chart I think I'm going to come back and revisit here in the future. And we'll see how this plays out with actually trying to find a bottom and see if this pattern that I was referencing down through here with making some higher lows comes to fruition or not. And if AMR indeed finds a true bottom, if that pattern plays out. But it's a pretty interesting thing to keep an eye on, something I've noticed over the years, something I've noticed following pinchers for so long, and something that I'll start to look for in a great deal of charts that trade on the big boards, including the Dow chart itself. This is as much a technical lesson in trying to find a bottom and what to look for as it is anything else. Of course, this is merely my opinion of the AMR chart and bottom plays in general. Thank you for watching, and trade smart.